BYD, a Chinese automaker once dismissed by Elon Musk as a Tesla's rival, enabled Warren Buffett to make nearly 40x gain holding onto this stock. Let's explore in this video an introduction about BYD, its rise amongst crowded new generation automakers in China, how Warren Buffett made nearly 40x gain on his investments in this company, latest news about BYD, and at the end, my perspective about it. Hi, my name is Sunny and I make content that affect a common man financially. So let's dive into today's topic, how Warren 40x in BYD. If you're new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which of course will be highly appreciated. I agree, BYD may not be a household name at least in the West, but in China it has been making vehicles for a while now. The Chinese car market has exploded when government incentivized both manufacturers as well as new car buyers so that they can switch to more sustainable mode of transport. Founded in 1995, it is a public listed Chinese company headquartered in Shenzhen, having close to 300,000 employees with a revenue of $65 billion, which is a jump of about 60% year over year. They also make lithium iron phosphate batteries intended to be used in their own cars while planning to sell excess capacity to other automakers including Toyota and big boy Tesla. From BYD's humble beginnings in 1995, it started delivering vehicles in 2003, where as of now, automotive sales account for nearly 53% of total revenues. Other activities they have including making mobile handset components, rechargeable batteries, etc., which is seen by many experts as diversification away from EVs or plug-ins. It now commands near 18% of Chinese plug-in vehicle market, whereas company's extensive experience gives it a boost over new entrants in the hot Chinese auto market. No doubt, BYD's growth looks very impressive so far, where having lower price to sales ratio in comparison to its peers makes this stock an attractive investment proposition. Berkshire spent $232 million in 2008 for its 7.7% stake in BYD, which is valued at more than $9 billion right now. Even though Elon Musk dismissed it as Tesla's rival in 2011 when it comes to design and quality of vehicles, but one thing is very sure, Warren Buffett does have an eye when it comes to picking companies very early on while their valuations are dirt cheap. He proved once again to be master at picking good stocks when BYD 10x their revenues between 2008 and 2011, 3x their net income during the same time period, thereby enabling him to make nearly 40x return on his early investment. He did benefit from intense hype of electric vehicles around the world, which took BYD's peak market cap to around $138 billion, which of course has come down lately. Mostly known for his investments in US based companies like Apple or Coca-Cola during market downturn, on insistence of his business partner Charlie Munger, he invested in BYD long time ago, hence Berkshire Hathaway made billions in appreciation as a result. Its sales more than doubled in May, reaching almost 114,000 units, which enabled them to reach a milestone of 2 million cumulative units produced till date, hence placing them amongst top 3 automakers in China. This is not an easy thing to achieve as COVID-related shutdowns in China alongside supply chain disruptions had a major impact on other automakers. According to a press release, they are poised to supply Tesla with batteries soon, thus placing BYD in the same league as major global battery suppliers like CATL, Panasonic and LG. With recent stock buyback plan at a relatively higher ceiling, gave a signal to prospective investors that they see stock undervalued right now as compared to its future growth prospects. No doubt, tax breaks both from central as well as local Chinese governments have played a huge role in expanding the size of overall auto market, but there are some things that you need to take into consideration while making a buying decision. There are some geopolitical risks involved, at least for North American investors, when you buy Chinese stocks. Remember one thing, there is a huge difference between Warren or a common man buying the same BYD stock. His ability to structure the deal and in depth knowledge on the subject will always outpace and outsmart us all. Moreover, all this will be very small relative to his overall portfolio or even for that matter cash on hand. Hence, he will be in a better position to withstand a bear market. In my opinion, you should have a plan ready along with the risk assessment even before you buy anything because that takes away human emotions while investing, whether it is a bull or a bear market. I hope it makes sense as I'm just a random guy on YouTube having an opinion and not even a financial advisor. So please consult one before investing. If you have found value in the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.